Hello everyone, welcome to unit of technical analysis. This is going to be how the market should be happening in the future. And I guess this is going to be an important video. Why? Because we had reached at some critical levels. Let's try to quickly recap what we saw last time, right? This was one of the charts that we used in the video. So this video was there of 5th of June, the Nifty weekly prediction, which was there for June 2022. Right? And we saw certain aspects. This is the same chart which has been used over there. I'll come to the same chart. Now, what we have done over there is, I'll just tell you quickly. We were trying to analyze 4 bear trends, right? So this bear trend was there of 2004 to, 2008, right? So this was the first one. We'll also compare this together on charts, not on charts, but what we have analyzed. See, we are trying to analyze 4 things. We are trying to analyze the bear phase of 2008, 2010-11, 2015-16, 2020-20, and try to implement the same things for 2021-22. Right. So let's go one by one, and the parameters that we had, how many months of downfall that we had, what level it had come down, right? And the time reversal which was there from 0.76, because most of the time we have seen, as per our unit of technical analysis basic fundamentals which are there, that generally the reversals are either from 0.236 level, 0.5, or from 0.76 from the top side. So 0.236, 0.5, and 0.76, these are the levels that are critical for us. And that's why for bear phase, we have considered a critical downform from 0.236 level. Let's try to analyze one by one. Right. So this is chart of 2008, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we had got 10 months. Just confirming the same thing over here. We got a low of 0.236. So overall chart which was there, this was one. The zero is bottom, 0.76, 0.618, 0.5, 0.382, 0.236. Right. So this is 0.236 level which has been given over here. Let the numbers be there because this has been used for other purposes also. Right. So this is like 0.236 level which has been coming down to. So this is the first chart. Let's go to the second chart. This second chart is there of 2010, 2011. Right. So we'll come to this part. So this was there for 14 months, 0.5, and we got a reversal after going or reaching to 10 months. So it required 10 months for the chart to go up to 0.76 level, and from there it started reversing down, right? So let's see how it is there. So this is the chart. We started from this. So this is the first month, second, third, fourth, fifth, sixth, seventh, eighth, ninth. And in the 10th month, it started moving down. Right? See, understand the pattern, which is again similar to the current pattern that we have. This is our current pattern, right? So what happened is, it did come down. It did come down below 0.76 level. It tried to move up. Again, it came down. It made a double bottom over here. Then again, it started moving up, right? In our case, it is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 10th month which has been moving up. And we have again reached to the similar levels of 0.76. Our 0.76 level is 16 to 30 over here, right? So this is the bottom 7511, which was been formed in March 2020, and after that we got a high of 18604.45, which was there in October, 19th of October to be precise. From there the market started moving down, right? So we'll just zoom across over here, right? And what we saw as a similar pattern is, first of all, it took time period which is there. So we are calculating time period and try to analyze how this market would be coming down until what levels. So this was the first one that we saw. This was the second one, and we came to know that okay, we took almost around 10 months. So the 10th month onwards started moving down, and then after that it was like 1, 2, 3, 4, 5 months. It went down gradually one by one, and it had come down to a level of 0.5 during the second part, right? The third year it was there, Third year means the third bear cycle that we had, right? It was there in 2015, right? I guess we got all the parameters covered, all the three parameters. It's like 1, 2, 3, 4, 5, 6, 7, 8, 9, and the 10-month onwards it started moving down, right? It had crossed above the 0.76 level. So it's not necessary that it will be reversing just from the 0.76 level. It may go up as per the range. The range is, let me show you the range. So this is the top. So this is the low, this is the high. It reversed from here, and on the top side, it gave a reversal from the top, which is 0.236 level. So this is again same basic fundamental range formed. It goes from the bottom, it goes to the top. Top we get a reversal and it starts moving down, right? So same things are there which we are able to see, right? We'll try to apply this in our part also, right? So we go to the third cycle. Third cycle is there of 2015. Let's see what is there in cycle of 2015. 2015 cycle was there for 12 months. It had again come down to 0.5 levels and it was there for 8 months. So from one level to 0.76 level, that is the last high, to 0.76 level, it had taken 8 months. Let's try to calculate that. So overall, it's like 1, 2, 3, 4, 5, 6, 7, and 8. 8 months which made a high, and from there it started going down freely, right? And from 8, 9, 10th, 11th, 12th. So 12 months. So 12 months of bear cycle, 0.5 level that it has reached, and it took 8 months to make a top up to 0.76. We are not considering any other top. It's just taking the last top. It went up to 0.76 level. So this again the same thing, 0, 1, and then reversing from the top level, right? Let's try to analyze same on our current parameters which are there, right? So first of all, this is a 0 level, this is the high 1 level, and from here it has been reversing now. Right? The current level that we have reached is 0.76, right? So let's try to mark down that also. So this is my first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th. Now currently we are there in the 10th month, which is been going on. Right? Two basic differences which I just wanted to inform you. Right? We have considered the high and low, and on the basis of that, we have considered the Fibonacci. Right? This entire Fibonacci. So we are not considering low of the specific patterns which are there. Let's say, for example, if this is a low, we have got a double bottom, and from there it had started moving up. But here it may not be the case. We had formed one low, we have got another low after that, which was not more of a double bottom, but yes, the closing of this monthly candle was just above these levels, right? So maybe there would be some differences which are there. We are trying to find out high probability trades from outside, right? So it's like, yes, it did go up bottom, made a bottom, and from there it started moving up. So but on the overall range, it is still there nearer to 0.76 level, right? So this are the main three parameters that we got. We are not considering this cycle. Why? Because it went up to 0.236 level and it had taken a shorter time frame, which was 10 months, and from that 10 months it was only taking 5 months for the reversal up to 0.76 level. So here we are already more than 5 months. We are currently sitting on the 10th month, right? So I'll just change this to the 10 months, right? So this probability is gone. Again, the 2020 probability is also gone because it only took 3 months. So we are totally neglecting this two, and we are only considering this two, right? Because the time period which is there is similar. That is 12 months, 14 months, which are there. And the time required for a reversal up to 0.76 level was 8 months and 10 months. So we are nearer to this part, 8 and 10 months. So we can consider that, okay, fine, either of this would be similar to our patterns. And that's why we are trying to focus on these two patterns only, more of. right? So this and this cycle would be of more interest to us, right? So we are not pretty sure how and from what levels we will be getting the reversal, because this is critical level. Now let's get back to the charts which are there and try to understand things which are happening, right? Now let's go to something which is there on 1st of July, right? This is an intraday chart which is there of 15 minutes. There was a bottom, and from there it made a high. If you look on this middle chart which is there, Fibo which is there, so it made a high, it made a low, and from there it gave us a reversal at 0.236 level and it came down. So it completed a reversal cycle. Now understand three important things. On the first Fibo which is there, it had given a reversal, it went up and it gave a retracement or maybe an extension which was there still 1.272 level. From there it completed a reversal cycle also. If we complete this entire range, we got a reversal up to 0.5 level, right? So our target get extended from here because this becomes our complete range and we will be going to an extension of 1.27 to 1.618. Let's try to expand that because I had taken this trade. So the first trade which I had taken for 16,000, right? And after that, probably that was being extended after getting the second. Yes. So this is the entire chart from 0 to 1 and the extension was 1.27 to 1.618. Now, if you see 1.618 is matching with this 0.76 level, which over here is coming to 16,330, which is there on, this is there on TradingView. The other chart which I had shown you, that was there on investing.com. So probably there may be some differences here and there. But approximately the levels may be plus minus 100 points here and there, it will be the same thing, right? So we expect that the market should be coming down to 16,382 levels, and currently it is somewhere around 1600 to 100 levels, right? Let's go further and try to find out more of in details. We got a cup and handle. This was been completed. Yep, this was the trade which has been taken for 16,200 levels. Why? Because till I expect that 14 July. Why 14 July? I'll tell you about that also. We got some certain further details, right? This was a measured move which was there. Let's say, for example, if you consider this cycle which was there of 16 bars, 22 days, and it took somewhere around to 1058 points. So that is approximately 1050 points. We expect that there should be a similar kind of move which is there. So considering the same number of bar, which is 16 bars, it would be coming down somewhere around 11th of July, right? So if it is 11th of July, 11th of July is going to be Monday. So we have to go for the next Thursday of expiry, that is there of 14th, right? So simple calculation that is on the basis of that. And the levels which have been expected is 16,241. Again, if you consider 16,241 plus the next level, which is 16,382, maybe 16,330, plus minus 100 to 100 points here and there. But maybe on the basis of probability to get higher points, I'd consider 16,200, right? So these are the various permutations and combinations that we get, right? So what is going to happen next? This is the most important and critical part, right? So we have got various hints that maybe this cycle would be completed. So if this cycle is completed, maybe around 16,240 or maybe around 16,330, 16,332. Probably this cycle would be completed. So once this cycle is completed, what's next? Right? So let's try to find out on the basis of the different patterns or maybe the details or data that we have, right? So first and big, that is the monthly chart details and comparing it with the last four and bear cycle, bull and bear cycle. So for the bear cycle, this is the data that we have, right? So if we compare that, yes, currently we are there on the 10th month, right? So again, we see period wise, probably somewhere around we are nearer to these two cycles. That is 8 months, 10 months. To be more precise, 2010, 2011 cycle. right? 2010, 2011 cycle. So 2011-12 cycle was we got a double bottom. Here we are not getting an exact double bottom as such, especially. What happened with the double bottom is probably it went above this 0.76 level. The range which was being formed, it got a resistance on the top side at 0.236, right? But here we don't find that any kind of specific range which is being formed, right? So probably this was the low and this was the high, and after that, if we see, this is going to be a bigger range, right? If that is there, the market will be going much more higher from here. Let me draw that Fibonacci also. We are just considering the low and the high. If the low and high is there, probably we should be going on a higher level. It should be either 16,625 or 17,406 level, which I guess would be quite difficult to achieve. Not pretty sure. At the end of the day, this is market. We are the best at only our analysis, nothing more than that. Right. At this time, I'll just remove this. Right. So this is the first probability that I have. If I compare it on the basis of apple to apple, that is the previous bear cycle that we had. Right. It went up to there and from there it started reversing. So this is one hint that we have. Right. Second hint, as I told you, probably there is a completion of this cycle, probably measured moves. So this is the first measured move of 1050 points. This is going to be a second measured move. It would be coming to 16,241. So this is the first probability that we have. Second probability that we have is completion of this cycle, the range, the reversal, and then coming to 16,382 levels. So overall, we get an indication that my reversal should be somewhere around 16,300, 16,400 level, right? Dates probably wise, we are not pretty sure, but this is the first thing. And one more thing that we have got from our side is I try to compare this with some other things. I haven't posted this on the group till now, but just made some current scenario details, right? See, this is a chart which is there of the all-time high that we had, which was there on 19th of October, right? If you see the candlestick pattern which was there, we got first gap up opening, second gap up opening, third gap up opening, fourth gap up opening, right? So there were continuous 4 days of gap up opening, and this was also a bearish engulfing candle, right? If we see the current scenario, yes, we have got one gap up opening, we have got second gap up opening, right? Here again, our target comes down to 16,387. A few minor points here and there, it's okay, right? Now, if you compare in this way, probably tomorrow again, if we get a gap up opening, right? And day after tomorrow, we'll again, if we get a gap up opening. So there are only two probabilities which are there. Either the market would be breaking out and going up further, right? Because this is a trend line which has been found, and this is kind of a breakout which has been given. So with that breakout, probably can just go up. Second option is it can come up, give a back testing, and then probably start going up. Or third one is giving us a fake breakout, and then the market starts coming down further, right? If it starts coming down further, probably again it will be having two options. Either it creates a 50% range and then goes up, which generally does happen because this has happened in the previous cycle of 2021, the 2020 bear cycle which was there, which was being completed in 2020, March 2020. Let me take you to another Fibonacci, right? So it was like, yes, it did go up, and after that we again got a 50% retracement also. So at times, yes, probably you should be getting that retracements every now and then. Here this was there. So this was more like a 50% retracement that we got, right? It may happen in that way. If it doesn't happen in that way, probably it would be like, yes, we should be getting a reversal from here. Expected reversal as especially. But this should be just a signal. We should be waiting for confirmations, if any, if this kind of thing happens. Why I'm talking about this is probably only because of one important thing that I understand. Is we are at this critical level, which I think is important for us to understand. Once we understand that, things should be easier for us. But yes, we should be waiting for confirmation. That is the most important thing, because until unless we get any kind of confirmations, things may not be easier for us. Let's try to check on something else also, right? We had in the last webinar completed or just tested Bollinger Band also. So where is my Bollinger Band? Nifty Bollinger. Probably I haven't seen that Bollinger Band. Let me just quickly draw a Bollinger Band. Right. Just change the settings, or not required as such. See, this was the last measured move. The measured move was just nearer to the Bollinger Band. The uh, upper limit of the Bollinger Band. Right here also it was at the upper limit, and therefore it reversed. So this is the measured move that we had, the last measured move. Again, at this time, what we are saying is, see, the trend is still in a round trend. If you see the red mark, it is 15,742, 15,724, and 15,725. So probably it has just started by a point going up. And probably because it is just outside the Bollinger Band, two things can happen. Right. See, this trend is also down. This probably is uptrend, but the simple moving average, the median which is there, that is still in downtrend. So if probably for a day or two it tries to move up, probably we should be finding a reversal from here, right? But most, if you check out with history, with the Bollinger Band just going out, it starts reversing, right? So in terms of indicators, again, we are getting a indication somewhere that probably this should be a reversal which should be acting. Again, understand the same important thing. These are just indications which are there in the market. We should be trading on the basis of price action, right? Price actions are the most important and critical things. And on the basis of that, yes, if you want to go for different time frames, you can go for various targets also. So probably if I get an entry, I should be getting for maybe I should be entering for trades which are there for short term as well as for long term. So long term would be there for 3 months, 6 months, 3 months more of, right? Because on the basis of these indications, yes, we should be going for 12 months, 14 months. So if it is 14 months, you have just completed 10 months. We are into the 10th month rather. And slowly and gradually, we should be going for those kind of targets also. If this is a complete bear phase, right? It can be less, it can be more. It's not very specific that, okay, we should be following this cycles only. But if we are going as per the indications, the short-term trend, why? Because that we are at 0.7 risk level. So this is first and most important thing. The indicators which are there, again, they are showing or signifies the same thing. Why? Because we are at the top of the Bollinger Band, and it should mostly reverse from here. It should be taking a day or two. Why day or two? Is very simple reasons. If it completes this cycle, maybe similar to this may be happening, right? Second thing for that is probably our targets that we have seen. Where goes my target? Over here. Yes. So again, maybe tomorrow, day after, because 11th is there, that date is there. And again, as per this target, it should be going to 16,382. So probably once it completes that, maybe on the basis of time as well as price, those are critical. We need to understand either it gets more of at those levels, and from there it could be start squaring and then start moving down if possible, because the time period that we see is huge, and this gives us a signal indication more of on that part. So this was just one of the indication. Again, if we go overall on so this should be which chart is there? Daily trend reversals. So daily trend reversals, if we check out in terms of the monthly chart, right? Monthly chart, the most important thing that we got is a monthly crossover. So this was the first indication that we saw almost 2 months back that we had got a reversal. This was there in May, and we were able to analyze this by June. So this is quite critical because once these crossovers are given, the market generally is there in a bear phase. So we have higher probabilities to still continue with the bear phase, and we are still trying to continue with that, right? Indications in RSI are again the same because it is not going much on an uptrend, right? So various things are there which still indicates that the market would be further going down from here. It may not go up, but the chances are still that we should be going down further from here, and it should be following, if possible, mostly this time frames. Just again, this is a wild guess on the basis of history, probability. I may be wrong, nothing like it, but we should be trading only on the basis of price action because that is the most important and critical thing for us to understand, right? So let's hope, watch how the market would be proceeding further. It would be like, yes, it may go up to 16,300, 400 levels, or it would be just target completing to a target of 16,300, 400, again the same things which are there. So tomorrow, that is Monday, and day after, these 2 days I consider as critical. I would be trading on the basis of maybe forming a low. If it is a gap up opening, I'll just wait for a low to be formed and then probably taking a trade, because if that is there, I should be expecting the next day again to be a gap up opening as per comparisons which are there, because this is again at the all-time high which happened. Probably this kind of trend says that okay, they want to form or maybe give a breakout, and they fail with the breakout, and then the market starts coming down. So we have got 2 days, probably 50% of probability, but with all the indications that we have, first of all, the MACD crossover, which is in the monthly chart. Second is on the basis of the levels that we have, again on the more bigger side. Third is on the basis of the completion of the cycle. So this again says that okay, something would be changing at those levels, maybe at that time period, which is tomorrow, day after. So let's try to be more cautious, and on the basis of that only, we'll try to have trades to be taken, right? So if you have any kind of doubts, we would be of course discussing in our group together, which is the Telegram group, Unit of Technical Analysis, and we have our YouTube channel. So YouTube channel is Unit of Technical Analysis for Trading, and there are various videos. So I'll request again to go through this video also, which is Nifty Weekly Prediction, June 2020. So you'll be able to understand in detail how we have done an analysis of the overall parts, which we're comparing all the 4 charts together, because this is just a small video that we have prepared, but that was more of in details doing all the calculations which were there. Okay, thank you so much. Bye, take care.